Hi everybody, and welcome to this fireside chat catch-up with one of our fabulous mortgage broking companies, being Bricks and Mortgages, that is owned by Beryl Colley. Before I introduce you to Beryl, I'm going to give you a background. I've known Beryl for nearly 18 years. Beryl was a customer of mine with her husband David, and they were role model investors 18 years ago. And they've gone on to become significant investors, or large-scale investors, and they've also got a mortgage broking business. So Bricks and Mortgages is Wellington-based. Beryl is the owner. She runs it, and she's got a team there in Wellington. And it's companies like this that specialise in investment lending that we promote and recommend and encourage people to go to. Because as an ex-investment lender over 20 years ago, I know that it's not just a case of sticking your PAYE returns down the fax machine or the scanner. It is extremely specialised, and it is companies like Bricks and Mortgages that really know what they're doing, and they're the sort of companies that we want our customers to go to, because investment lending is very different to mum and dad home loans. So Beryl, welcome, and nice to see you again after all these years.
Oh yeah, it's good to catch up.
So Beryl, you're just give us a bit of background of Bricks and Mortgages in terms of how old is it, who your clients are and where you've come from.
So the company is probably around about 17 years old. I went out on my own after doing 3 years with a understudy with another mortgage broker.
Yeah.
Our focus, our groups of clients are probably threefold. But when we talk about property investors, I work with new investors entering into the market, and they're really exciting people to work with and help them get started with their journey, but also putting together strategies and plans lending-wise to help existing investors grow their portfolio.
Great.
So I guess as a result of the clients that I've worked with over the years, a large portion of my clients that I still work with fall in the field of property investors.
And what percentage of your clients would come back and buy 2, 3, 4, 5 properties, Beryl?
So a lot of my business and ongoing work is from repeat business and people growing and continually extending their portfolio.
Yeah.
Yeah.
Okay. Well, look, we say to our clients that they can trust us to refer them to good people. You're a great person. I've known you for a long time, but also you are very well regarded in the industry. You were referred to us by a number of customers and of yours, and that's what we do in each location to find expert companies. So look, I guess the theme for this discussion, this catch up, is really the impact of COVID-19 on customers' ability to borrow. What are you hearing, seeing, feeling with the banks, Beryl? What's the theme or message you're getting right now?
So we've still got pre-approvals in process with all the 4 main banks. Some of the main banks, our normal policy is where possible to use the owner-occupied property for the client's current mortgage and the deposit funds, but use Bank B for the new purchase.
So you split the lending between banks,
the lending.
Right?
So yeah. In most applications, we're doing a two-lender application.
Yeah.
There are some lenders that are leaving till last, or not accepting new applications for people that don't currently have main banking with them.
Right. So if it's a new customer, they're putting them on hold.
Yeah. So that they can then that may change in the next in the next short time, but it's mainly so that they can work through the applications for interest-only loans and mortgage holidays that they're working through.
Yeah, my 2 bankers, and we've been dealing with them in the last 3 weeks. BNZ and ASB have both said they're backlogged with changing people's home loans, business loans, and just supporting the government. So do you see this as a so it's not, they're not saying no lending, are they saying, we're just too busy?
No, in fact, we've got assessors actively working through pre-approvals that we've got in the process, so they're still moving through the process. So it's a good time for people to position themselves to be pre-approved, so that when COVID lockdown lifts and we're back down to a level 2, they're already pre-approved ahead of everybody else that might then be thinking, okay, let me get back in the game.
Exactly. I mean, look, we've launched a number of pretty exciting property opportunities of late, but a lot of the clients that have their own, that are dealing direct with the bank, which we typically don't suggest to do that, or have their own broker, we're getting the same feedback, but most of the brokers are saying the same thing, that people should still carry on because it is a first on, last off sort of, last on, last off type approach. So you're better to get in the queue, so to speak.
Yeah.
Okay. What other things can investors do during this time, Beryl, to help streamline their application?
So some of the things that they could do is just assess the levels of their short-term debt. So if we see people coming through with large limits and lots of short-term debt, look to applying to reducing those limits on their short-term debt if it's going to affect their servicing. One of the things that we're always more than happy to do is do a pre-assessment consult, so that we can go through that consult and you can understand what your weaknesses and strengths are, and give you a game plan around that. So if servicing something that needs to be improved, reducing short-term debt limits is one way that you can immediately have a positive impact on that. If you're self-employed and you haven't and you've got an opportunity to look at your last set of financials, just understanding what feeds into your financials, always discuss with your accountant your plans that you want to be able to use your financials for borrowing, so that only genuine expenses go through as expenses. Or if there are home office expenses, that they are genuinely tagged as home office expenses and not under a murky name. It's got to be clear for the lender to see that it's a home office related expense.
Which is, that's like business. I mean, this is business lending. People, a lot of customers, and we forget to remind them that, well, not at the beginning of our journey with them, we don't. But we do reinforce, and we should always reinforce to investors that it's a business, treat it like a business, separate everything out, including as you're splitting out the loans from the home to the rentals. But all the accounting and all of the admin is again separate to your home accounting or home admin, because property is a business and it should be treated as such.
Yeah,
so,
that's right.
Okay, so that's good. That's good advice. So get their stuff together, get their information, keep it in a clear and concise manner. I mean, when you get customers' information, when you get all of their tax returns or their employment contracts and their income and their expenditure, how often are you having to, do you spend a lot of time tidying it up before you package it and send it to the bank, Beryl? What's your internal process to make, how could your customers provide information to make it easier for you to present them to a bank?
We've got a really cool system that we use where I generate an online link for customers to complete their fact find. So customers really enjoy this process, and I find it much more engaging than the old traditional system. So we get notified when a customer's completed their fact find, and then I jump in onto the system and see if there's any missing bits or questions, and dial in on the customer and have that conversation. And then once that fact find's completed, I do something different as part of my process, and I do money's actually simple, but people tend to ignore it or back away from it. So I do a very simple one-page form called an operating surplus. So it just maps out the client's current as-is financial situation, and it shows them what their operating surplus is, which is their opportunity to save cash or fast-track their short-term debt or fast-track their home mortgage, because we always cover that off in a conversation. Fast-tracking your own mortgage, if you've got the opportunity, is a really, really good way to always improve your debt servicing and create equity to be able to make that extra purchase.
So you're doing a cash flow for them, or are you going even deeper than that?
No, we're going deeper than that, because we're putting a plan around it.
Right. Okay. Yeah. Great.
So the other thing that I then do is I do an illustrated bank account structure. So all these things are really easy for me to show on Zoom meetings because they're illustrated. So I do an illustrated recommended bank structure, because if clients are very intentional about which bank accounts their money flows into and where their surplus goes, then they're much likely to have a more positive outcome with fast tracking their mortgage or whatever their goals are. And then we run a scenario. If the client's buying an investment property at certain value with certain rent, what does their operating surplus look like? And so that they can clearly see their affordability.
Yeah.
So we can model.
So you're straight into the numbers, and you're basically working out very quickly if the client is in a position to borrow or not.
Yeah.
And if they're not in a position to borrow, what do you do?
So if they're not, then we help work through with them a plan and put together some steps and stages that they can work through, because most people can. They just need to maybe make some changes or some modifications, and then put some review parameters around that depending on the plan.
Brilliant. Okay,
Yeah.
so you're almost a financial advisory service as well as a brokering.
Now, I very much enjoy focusing on the educational part of the finance to empower the client with some steps and plans so that they can make some positive changes to get to where they want to be.
You're reminding me of your initial investing career. You just buried yourself in it and became expert in doing the basics right way back when. And that's now providing you with your retirement fund.
Yeah.
Doing the same for customers in terms of getting them on that. And one of the things we press to our customers is that mortgage broking is not equal to home lending. Even first home buyers are a different beast to investors, aren't they?
Yeah. Oh, yeah, that's right. It's very strategic. And just thinking more, you've got to think more than just 6 months out. So it's certainly very strategic. That's why it's really good to have somebody who can round table your finances with the client and sit down and give you suggestions. And banks don't offer that option for people.
Absolutely. All right, the old question that we ask every one of our partners, where do you see interest rates heading in the next 12, 24, 36 months, Beryl?
So the Reserve Bank's locked in their rate, locked in the OCR for 12 months. There hasn't been any movement from the main banks, but interesting, this morning we've had an announcement about non-bank lenders reducing their rates.
Oh yeah.
So that's a really interesting move from one non-bank lender. So their rates have dropped considerably. So
when you say non-bank, break that into English for our customers, because not everyone knows what a non-bank is.
We've got the four main banks that we work with: BNZ, Westpac, ASB, ANZ. But then sometimes clients, for whatever reason, don't fit into the main bank scenario because maybe there's been a credit issue, newly self-employed, new to the country, or financials aren't quite prepared, or it doesn't meet the bank's lending criteria with LVR or debt servicing. So one example that I am working on at the moment is with a client who didn't have enough equity to do his rental property under the main bank structure. So we're using a non-bank lender for him, or we'll use a non-bank lender for another client where the debt servicing calculators didn't work with the main bank lenders, but his personal cash flow was quite fine. We've got a non-bank lender whose debt servicing calculator works on a very different matrix to the main banks, and we can get through a loan with them. So non-bank lenders aren't something to be afraid of. They're there to give a plan B for somebody that doesn't fit the main bank structures.
Well, from what I've heard in the Northern Hemisphere, non-bank or non-main bank lending is becoming the bigger part of the market, to the point that tech companies are lending money. Social media companies are lending money.
Oh, wow. Yeah. So, I mean, in Australia, some of the non-bank lenders that we work with in New Zealand, in Australia, they are massive in the marketplace as lending options.
So if you got a loan with one of these non-bank lenders, what would the terms be? How long would the loan be for, and what sort of interest rates?
So normal 25, 30-year term for the tiers of non-bank lenders. Yep. So for the first tier of the non-bank lenders that I'm referring to, normal 25 or 30-year loan, can do interest only. Do have to provide registered valuations, and some of them we need to provide a little bit more than we do in a normal application. But their turnaround is really fast.
And what sort of rates are they charging?
5%, or the one today dropped well below 5%.
Wow.
Yes, yes.
Okay, that's
You know,
great because
rates that really, what I say to clients is rates that we were happy to pay 18 months ago.
wow. Okay, so there's not that it's not twice the rate or three
No,
times the rate because I
not at
mean
all.
I
No.
know that there are second tier financiers out there that still charge 8, 9, 10%.
Yeah, yeah.
But if you're under 5%, it still makes sense. And I guess if somebody's got temporary issues that prevent them going to a main bank, 6, 9, 12 months later, do you
Yes.
refinance these companies?
Sometimes, you know, 12 months later, the plan would be to refinance the client back to the main bank once they've got their financials and the 2 years worth of self-employed financials in order, or they've got their New Zealand residency in order, or their credits rolled off their credit check and then they've got a perfect credit report.
Yeah.
So the aim isn't necessary to leave them there forever.
Yeah. Okay. And if well, based on some of the deals that we've got today, at 5%, they're still cash flow positive.
Totally.
So,
Yeah.
so that's I guess that's great. I mean, and again, the world of investment lending is so different. Mum and Dad wouldn't go to one of these lenders for a home, would they, or would they?
Oh yes, yeah, totally. They would. Yeah, yeah, yeah. We'd use those lenders if they don't fit in with a main bank lender. We could put first home buyers or mum and dad owner in with a non-bank lender.
Okay.
Yeah.
Awesome. Now, okay, no, that's good to know. And from where you're splitting loans, do you get involved on the tax side of things in terms of advice, or do you refer people to the right accountant?
I refer people to the right accountant, so I understand the structures and the mythology around it, but I always make sure that there's an accountant that backs up the advice of the client.
So you would be you're a financially literate mortgage advisor around tax and asset planning and debt consolidation and bank splitting, correct?
Yeah, yeah.
Right. Okay. All right. So gut feeling, in 6 weeks' time, do you think things will change in the lending world? Do you think these banks will once they've sorted out business loans and mortgage holders, do you think they'll be back in the market wanting to lend to investors?
Yeah, totally they will be. It's not a long-term situation because once they've got through the backlog of clients needing assistance, and I mean, as I said, I've got clients going through pre-approval process now, and I've got approvals popping up in the email. So they've still got people actively working in the broker units.
Yeah, right. And as I've seen with my own experience dealing with my two bankers, they want to help, but they're just snowed with the immediate pressure.
Yeah.
Do you think rates will come down in a couple of years? Do you think they'll stay the same? What are your views on the long-term outlook for us?
Regardless of the long term, I say to clients, I mean, at 3.05% interest rate, yeah, you can't sneeze at that any day of the week anyway.
No.
For people that hang on for maybe the 0.1 or the 0.2% drop, when our rates are so low, it doesn't make a big impact on your overall investment. The key, I think the key is to get into an investment, and then you've got your ongoing capital growth that is going to happen once we're over this blip in our economy.
Well, I have used in the past brokers, but because I've been a broker, I've looked after my own lending for the last few years. I should probably stop doing it and get more hands off and use you, Beryl. But I locked up. We were going to sell some properties and we decided not to, and then we decided we were going to sell them. We decided not to. Anyway, we decided to keep them, and we've been floating at 5.15% with the BNZ, and in about 3 minutes, and our banker actually came back quite quickly because we do a lot of banking with them across my business partner and myself. And bang, 3.5%. It saved us $17,000 a year.
Wow.
From 5% to 3%. But even then, it was still cash flow positive before we changed it.
Yeah.
So I guess, and I'm finding it quite difficult for customers, especially new ones, to understand that these rate changes are significantly impacting cash flow from $1,000 a year pre-tax positive to $5,000.
Yeah, it's a big difference. One thing to be mindful of, even some of the main banks, when your loans roll off fixed and you think, oh, I'll just leave it on floating and see what the interest rates do and sit and wait, that's cool. But you need to make sure, contact your broker to make sure that you're actually on the discounted floating rate and not the carded floating rate.
Yeah.
Because
And
there's
again,
some banks that you'll roll over and you'll go onto the carded floating rate, which is not very nice.
Look, there's so many tricks in your trade that we just say to clients, don't try and become a mortgage broker. Just get in the hands of a great one.
Yeah.
So
it's all about leverage of your time, really, isn't it?
Well, that's right. I mean, most of our customers are in paying jobs or they're self-employed. They don't have time to become expert lawyers or mortgage brokers or financial advisors or lawyers. So hence why we've done the heavy lifting of hunting down the likes of yourself, Beryl. I look to our customers. We've got existing clients that have used Brixton Mortgages and they've been unbelievably happy with them. And so our investment consultants around the country work with the likes of Beryl and their team. Anything else you'd like to say to people who are sitting at home and they're unknown about the investment world and the investment market and loans? From a confidence perspective, I mean, do you see this as the Dark Depression? Do you see this as a short-term thing, Beryl? What's your view on it?
I guess in my mortgage broking career and investing career, it's not going to be the first blip in the market we will have faced, and it might not be the last. But just to understand that property investing is a long-term strategy. Yeah. I've got properties in my portfolio that I've held on to for years, and they're still giving amazing cash flow, and I've had good capital growth from them. So it's a long-term strategy, not something for a short 6 or 12-month window. So that's just something to keep in mind. We're still going to have, I believe, a shortage of rental property once the lockdown's lifted. We're still going to have an undersupply there, and tenants looking for properties. That hasn't changed, I don't think, with COVID.
No, and we've been saying the same message. The fundamental problem of a housing shortage doesn't go away.
No.
In an ironical way, I mean, the global financial crisis impacted everybody in property one way or another. This crisis has actually given property investors a pay rise. And it doesn't feel right, but it has. I mean, going to 3% on mortgages from 5 was. I remember when 5 was a crazy cheap rate.
Yeah.
And now we're down to 3, and some banks are in the 2s. Bank of China is offering a 2% rate. So it's Heartland. Yeah. So there's a very solid reason to be using this time to learn about this stuff. Just before we go, Beryl, I haven't asked you, but first home buyers, they're an important market for us. Do you spend much time with first home buyers?
Yeah, I do a lot of work with first home buyers, and again, just those consults and positioning them so that they know what they need to change around their habits and their current position to get in. But we can still do first home buyer lending with as little as a 5% deposit.
Wow.
Yeah.
So I've done the math on a lot of the properties that we've got, and we've got one complex in Christchurch, which I think with my social left hat on, I wish the whole lot had been sold to first home buyers because it gets new people on the property ladder. And to date, I think we've had one. And I look at the cost of rent to a first home buyer versus the cost of ownership. And it's crazy.
Oh, totally. With interest rates so low now, most first home buyers that I'm putting into homes are now paying less than what they were doing when they were renting.
Yeah.
Yeah.
No, same. And that's across the country. Even in Auckland, we've got...
And that's taking into account the extra cost of rates and insurance. It's not just the mortgage. Their total outlay is less than when they were renting.
And do you find that you put that light bulb on for those customers who, when you're talking to them, I mean, it's interesting because we're dealing with first home buyers. For me, it's when we talk weekly cost. When they see the weekly cost of renting versus owning, they all of a sudden get it. Are you finding other ways that they open their eyes to it?
Yeah. So that one-page operating surplus that I talked to you about that I do for the client consult, we do an as is, and then we do the operating surplus with a proposed mortgage, and so they can see it really easy. The total affordability is there. It's never been a more perfect time in the market for first home buyers to be making a step. Most people's KiwiSavers have got really good amounts in, and they probably need to have a look at what sort of fund their KiwiSaver is sitting in at the moment. But and the Home Start grant's available for new builds, which has really made a big difference as well.
Yeah, I mean, we've got more. I remember when we had depreciation on buildings, it was a huge tax relief for investors. It was huge, massive. But if I look at the Home Start grant, KiwiSaver, interest rate levels, I actually think this environment is better than it was 20, 25 years ago in terms of getting onto the ladder, because you couldn't do a 95% loan in those days. You still needed a 90%, you could get a 90% loan as a homeowner, but investors were still, off memory, 80% loans max, maybe 70. And you didn't have any of these grants. And once you got on the property ladder back then, you were off.
I can remember a time where certain suburbs and certain parts of the country, for first home buyers, you had to have a 30% deposit.
Yeah, no, there's not a first home buyer potential that shouldn't purchase in my eyes if they've got a solid income.
Yeah.
And even if property doesn't even excite them, it's their retirement income, it's their retirement package. It's almost, it's such a safe place for them to get into. So, no, I'm glad to see that you do deal with first home buyers, and we will be sending first home buyers your way. Beryl, those beeps in the background is my system telling me that I've got another call that I have to be on. Last question for you, I guess, is look, we're referring people to Bricks and Mortgages. We've had fantastic service from Beryl and her team. Is there anything else you'd like to say to our customers, Beryl, about your business and how you can help them?
So we operate really, really easy remotely, and just have that very, very easy to use online system for you to put your information in. So, some people get scared about paperwork, but find it much easier just to look at an online application and just work through that bit by bit. So our systems and processes that we've installed have just made it really super easy. But and then we engage with you with that one-on-one consult, so that you can get clarity around your goals, your steps, and what your path is going forward. So it's not just yeah. Cool.
So you're Wellington based, but you still operate nationally, is what you're saying?
Yeah, totally. I've still got Invercargill clients. I work with clients in Auckland and Northland, so I've got clients right across the country.
Wow. Okay. Well, look, thanks for your time, Beryl. We're big fans, and we'll be recommending our clients to talk to you. And we introduce our clients to you via email. So for customers watching this, talk to one of our investment consultants, or you'll be getting an email referring you with Beryl's details and Bricks and Mortgages details. So thanks for your time, Beryl, and keep safe during these very strange times. And I look forward to our lovely Prime Minister giving us the all clear that we're going to 3, then 2, then back to the normal. But I fully support the dramatic measures that she's taken, because the horror stories of New York and Italy and Spain are Britain. I mean, the Prime Minister's in intensive care. It's terrible.
Yeah.
So thanks for this ad hoc I guess, interview, because we really want our clients to see the depth of experience with our professionals. And it's been a while since I've seen you, Beryl, and it's great to reconnect. And I look forward to sending you more of our wonderful customers.
Cool. Thank you. Stay safe, everyone.
Thanks a lot. Cheers,
Bye.
Beryl.